Hey there, everybody. Tom's with Basecamp Trading. It is Tuesday, March 3rd, and we're going to take a look here at bonds and what bonds are doing because they are jumping. So if you didn't hear, Fed did an emergency rate cut today, 50 basis points, and markets kind of went crazy over it. We saw gold shooting through the roof. We saw euros jumping quite a bit. We saw indices initially shoot higher and then turn around and go back down. And we've seen bonds initially shoot down and turn around and go back up. So what does a rate cut mean for bonds? What does that tell us about bond market? So when they cut rates, when the Fed cuts rates, it means that current bonds are worth more because future bonds are going to be worth less. So it increases bond prices. It pushes prices higher. Now we have seen bonds already jumping this week and last week because, or in the expectation of a Fed rate cut, because we expected them to do an emergency rate cut because of the market crash last week. So it's already baked in a little bit, but I want to show you an example of what happened last time they did an emergency rate cut. That was back in here. In the end, going into the end of 2008, the Fed did an emergency rate cut, and you can see what happened. This is TLT, and it went through the roof. Now, full disclosure, one of the things I did as soon as they said, as soon as we got the announcement, hey, we're cutting rates, I went and bought call options in TLT and increased my position in TLT already. So I'm net long quite a bit in bonds, looking for this to continue to push higher based on the rate cut. So the outlook for bond market is bullish. Just be careful because we've already moved up quite a bit. So we are getting a bit extended. That being said, with the current volatility, I wouldn't be surprised at all to see, for example, TLT jumping all the way up around the 165, 170 area, another 20 points here over the coming week or two. So be keeping an eye on that. Also, one of the things most people would expect is, hey, the Fed's cutting rates. Shouldn't that push the market up? And the answer is yes and no. The initial reaction was up, but overall the market's moving lower. And again, full disclosure once more, I'm currently short the S&P from 3078 and 3/4, looking for this to continue to sell off here. If you watched my video yesterday, I talked about how our bias for the indices was not bullish. We expected a bounce, but we expected to continue to push lower longer term. So one of the reasons that this could be happening is the Fed's cutting rates, which means the coronavirus fears have substance. All right, there's a reason for that. That means they're expecting the economy to take a hit from it, from the coronavirus, which means it could be worse than what people are expecting. So that's helping push prices down because it means, hey, if the Fed's taking action, maybe there is something to this. So keep an eye on it. I wouldn't be surprised if the indices continue to push lower. I'm looking for the S&P. My target for the S&P is around 2,900 or so. So I'd like to see it drop another 100 points over the next day or two, assuming we can break through today's low tomorrow and assuming we don't just completely reverse here in the afternoon. But again, I'm bearish indices, bullish bonds, and a lot of that is due to the rate cut that just happened and the fact that coronavirus is still spreading. So that's it for today. I hope it helps. Again, just to recap here, bullish bonds, if you want to trade those, you can either use futures or you could use TLT, for example, an ETF, and you could use options there as well. And then also short the indices, which I'm short in futures contracts. So that is it for today, though. I hope it helps. I will see many of you in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you're enjoying these videos. And until next time, everyone, happy trading.